Wall Street was gripped by another wave of worry over the spreading coronavirus, and Friday was no exception. Coronavirus cases surpassed 101,000 worldwide. Deaths topped 3,400. This could cost global economy $2.7 trillion. Also, Chinese exports fell 17.2% in the first 2 months of the year. Air travel poised for worst year on record. Don't be frightened by current market volatility. Here are 7 ways to manage volatile markets. There is no place for emotions when you're trading. There are 2 kinds of analysis. Fundamental analysis, which involves researching and examining the financial conditions of a company, basically the stock you want to buy, and the technical analysis, which helps in determining the right entry and exit prices based on the historical performance. So each decision you take to buy or sell a stock needs to be planned, and you need to stick to that plan. Also, remember that you don't have to trade your entire portfolio actively. In fact, you shouldn't. Instead, consider your personal risk tolerance when deciding how much of your portfolio will be used for trading. Perhaps something like 20 to 30%, and then keep the rest of your portfolio as core holdings. If you want to be a successful trader, greed is probably the biggest obstacle you will have to overcome. If you try to get rich on every trade, you will more than likely end up blowing your account. Guys, slow and steady wins the race. It's the great challenge that all traders face. If you want to get rich quickly, you must do it slowly. Don't assume overly large positions to maximize gains if you aren't comfortable with the risk involved. After the market has done well, recency bias and FOMO effect cause investors to be more afraid of missing a bull market than of suffering large losses. However, in these times, we need to remember that we chose a diversified investment strategy because it provides us with the highest probability of obtaining our financial goals while exposing us to the least amount of volatility possible. A good stop loss strategy involves placing your stop loss at a location where, if hit, will let you know you were wrong about the direction of the market. Now, you probably won't have the luck of perfectly timing all your trades. As much as you'd like it, the price won't always shoot up right after you buy a stock. Therefore, when you buy, give the trade a bit of room to move before it starts to go up instead of trying to prevent any loss. A stop loss is intended to exit a position if the price drops so much that you obviously had the wrong expectation about the market's direction. Trying to pick the top or bottom of the market seldom works to your advantage. It's usually much easier to follow the direction and momentum of the market than to fight it. If you're going in one direction while everyone else is going in the other direction, you'll likely get trampled. Long-term traders may look for trends in weekly or monthly charts, while short-term traders may use daily charts. If you own positions that have increased substantially in value, selling some of your shares is a good way to protect some of your gains. Plus, you still have the potential for further upside on your remaining position. During times of higher than average volatility, a slightly higher cash allocation is often prudent. By taking partial profits on some of your appreciated positions and leaving those proceeds in cash, you can help protect those profits and lower your overall risk. Just as markets can't go up forever, they also can't go down forever. Periods of heightened volatility come and go and often are short-lived. If you don't have a good feeling for where the markets might be heading, sometimes just sitting it out isn't such a bad idea. Recent market moves, both up and down, can be unsettling for traders. On the one hand, you know there are opportunities out there. On the other hand, the markets can be punishing if your strategy proves wrong or ill-timed. But if you use these 7 steps, you can be in a good position to keep your trading on track. Folks, that's all from my side. We'll meet you next week. My name is Yogesh, and you have a great week ahead.